Just now, Mark, fantastic to have you on ET Now. Thank you for joining us.
It's a pleasure.
Mark, the budget was presented 24 hours ago. Now that the world has seen the real commitment and indication from the government of India, from the light of an investor, this budget has not really paid too much of attention or cognizance to the entire spending aspect, which is that Indian government is clearly sending a message across that we want to get growth back by spending. Every time when fiscal deficit numbers have been overlooked, foreign investors have panicked. But this time it is different. Why is that?
I think because, as you see from a global perspective, the Indian government is not doing anything much different than what the other major governments around the world are doing, and that is pumping up liquidity, making sure there's enough credit available in the markets and so forth. So India is really following the lead of other countries that are really intent in encouraging a recovery of markets. You see that in the US, you see it in Europe, you see it everywhere else. So that's not the news. The real news in India is the fact that the Indian government is now allowing foreign investors to come in and control the companies in which they invest in. That's very, very big news. And the other big news is the privatization program. That is very, very important for growth in India. And foreign investors realize, in fact, not only foreign investors, but local investors realize that privatization of state-owned enterprises in India will give a big boost to economic growth in the country.
Mark, having said that, currently, what are the other priorities which investors would look at when it comes to emerging markets like India? Because each emerging market, Mark, has a different proposition. India has a promise of better earnings recovery and growth. China is a proposition of a market which is come back but is still available cheap. Russia and Brazil could be a play on commodities. Which way do you think investors should lean now?
Well, of course, the big number is 1 billion. 1 billion people in India, 1 billion people in China. That is of paramount importance because it means that you not only have an enormous market, an enormous consumer market, but you also have an enormous ability to produce. So India, of course, will become more and more important in the global manufacturing continuum. So those simple facts means that India is going to become more and more important. It's already important, but it will become more important as we go forward, as these reforms announced by the government take place.
Mark, when we spoke last, you said you have 3 positions in India and India was a overweight position for you. Are you tempted to make it to 4 or even 5? And are you looking at increasing exposure to India?
Well, yes, we would increase exposure. It's still high. It's still the biggest single country exposure we have. We don't want to add stocks. In fact, our limit in our portfolio is 30 stocks, and we're at that limit now. What we might do is replace some stocks we have for an Indian stock. Let's say we move from a stock in Taiwan or Korea or someplace and replace it with an Indian stock, or we might increase the holdings that we already have in India.
Mark, with so much of growth coming now, can one safely ignore the near-term risk of valuations? Because if indeed there is a case for earnings recovery and mean reversion, one can actually ignore the near-term concerns on valuations. You think that is the way to looking at markets right now, that we are in a bull market, and at the beginning of a bull market, earnings bull market, valuations will always be expensive?
Well, given the recovery, don't forget, we're coming from a minus number last year in terms of contraction of the GDP, not over India, but all over the world. And now we're going into a positive number. So that's a big, big shift. So that means earnings, of course, will look much, much better this year. for companies in India. So, if you're looking at price earnings ratio, suddenly the price earnings ratio goes down as earnings go up, provided the prices don't increase too much. But nowadays, because of the very low interest rates around the world, the traditional measure of price earnings is not as important as other factors like growth. Where are we going in 2, 3, 4, 5, 10 years? And you can see that in markets around the world. Why did Tesla perform so well? They were losing money a few years ago. Now, of course, they're king of the pack in the automobile sector. Why? Because people are looking at the future, and they're now realizing that if they're getting low interest rates in the bank, they want to keep their money in the bank. They would prefer to put it into growing companies that promise a reward sometime in the future.
Right. Mark, many believe that this is a big re-rating moment for India, and it's the old economy stocks that need to be bought right now because they haven't quite participated in the rally since the March lows. Do you believe the time is right and perhaps the rationale behind it to buy into industrials, old economy metal names?
Yes, we are investing in the industrials in our Indian portfolio. So yeah, there are some opportunities in that area. However, you have to be very careful because with the environmental, social, governance, ESG factors foremost in the minds of investors, any company that has a risk of polluting the environment or having some social issues in the neighborhoods where they operate could be in big trouble. So that's the reason why many of us shy away from, let's say, mining companies because they are susceptible to these risks. Now, of course, those companies that do change and reform, they could do very, very well because they probably have been ignored and people have shied away from them for the reasons I mentioned. But if they're able to make the changes to improve environmental and social standards as well as governance, then they should do very well. So my answer to your question is yes, it's a good time to be looking at some of these companies.
Mark, also the government was very clear and categorical and transparent, if I can use all these adjectives, in the disinvestment pipeline. Also, it was more leaning towards privatization, as many believe that is the texture of stake sales from the government's table should be like. Would you now be willing to venture into state-owned companies? To PSU bank privatization as well is what the finance minister highlighted and talked about extensively yesterday. But as an investor, does it interest you still, or would you say wait it out, wait to see what's the first company to get privatized, how they do it, what valuation they get it at, and then perhaps I'll take a call?
The latter. That's certain. We've got to see actual implementation. But if we can see a clear path where the government is really moving ahead in any particular company or sector, then we would look at it very, very carefully to see if there's an opportunity. Because, it's one thing to announce privatization. The other thing is to see if the implementation is done properly and with speed. And as you know, there are lots of complications. Nevertheless, the mere fact that the government targets a particular company for privatization would mean that we would be getting very, very interested to see how that's going to be implemented. So the time now is to begin looking at these companies and following the government measures to actually monetize and privatize these companies.
Mark, we're talking about a huge shift that COVID has brought about when it comes to digitization as well as the economy. And within that, in specific, new areas of innovation in businesses for improving their products and services has significantly been seen within the IT and technology space. How are you approaching this theme?
We are very, very excited about the digitization of industries globally. We're seeing this happening in every market around the world. And it's very significant that your finance minister delivered her budget digitally. This is a very, very significant change. And it shows the commitment the government has to digitalization. And we're seeing that globally in every industry. And by the way, apropos to what we were talking about just now, about some of the traditional industries, some of the biggest changes are taking place as a result of the technological impact on these industries. It can be everything from supply chain to keeping workforce records, getting feedback from customers digitally, and so forth and so on. So it's really a very revolutionary impact. And as I point out in my recent book, The Inflation Myth, I point out there that the technology impact is having a deflationary impact, not an inflationary impact, but a deflationary impact, which I believe is very, very good for society in general.
Okay. And Mark, there was a huge thrust as well on infrastructure, but other than that, healthcare. And that has assumed a lot of importance in these very tough times that we're currently in. How have you looked at the kind of boost that we've seen for the healthcare sector as a whole in the budget, and just, that theme on vaccination, etc., playing out for India?
Very, very important. Healthcare is critical for not only the health of individuals, but the health of the nation. The more people who are healthy, the more people who are taken care of in terms of solving their diseases and sicknesses, means that the country becomes healthy and more productive. See, at the end of the day, you must look at the healthcare system as a very, very critical infrastructure of a country. A good infrastructure, whether it be roads, bridges, telecoms, connections, and healthcare, is very, very important to increase economic growth and for the general betterment of the people. So I would say COVID-19 is in some ways a blessing, because it put a big emphasis on healthcare around the world, and more countries are spending more money on good healthcare, whether it be hospitals, better vaccines, better medicines, et cetera, et cetera. So I think this emphasis in India is going to have incredible repercussions going forward. And don't forget, it's not only this generation, but generations to come. The young people taken care of with better health will be much more productive individuals and happier individuals going forward.
Mark, markets always tend to price in the good news and way ahead of the actual on-ground event. Not for India, but for equity markets in general, this is going to be a year of comeback. So what are the chances that when we will look back and analyze stock market movement for 2021, the headline would say the following: a great year for economic rebound, but not a great year for markets?
That's quite possible, because you've already seen an incredible run. And as you know, stock markets tend to run ahead of the economy. In other words, this incredible recovery we've seen in the stock markets is reflective of what we expect for the economy. But that doesn't mean that with a good economy, the stock markets can continue to rise and do well, particularly if we have the low interest rate environment and the money supply moving up at a rapid pace. So I would not be on the pessimistic side, let's put it that way. I think the markets will do quite well this year.
So, Mark, the importance of cycles. You've been dismissing that inflation is not going to come. But with the spike in prices of copper, cocoa, orange juice, sugarcane, crude, gold, platinum, copper, inflation is coming back.
Yeah, see, we talk about inflation, but I don't call it inflation. I call it currency devaluation. And as I point out in my book, no currency around the world since the beginning of history has maintained its value, simply because currencies are determined and controlled by governments. And governments have always the nature of devaluing currencies in order to get more benefit. So we shouldn't look at it as an inflation, but as a currency devaluation. The good news is that the currency devaluation impacts not only the prices of goods and services, but the incomes and salaries of people. So in my book, for example, I show that in India, yes, prices have risen as measured by the consumer price index, even though it's a very flawed index, as it is all around the world, but incomes have surpassed, the increase in incomes and salaries have surpassed the measurement of inflation. So we're actually, again, emphasizing the fact that this is a deflationary environment. So people have to work less to get more, to get better services, more goods and services generally.
Mark, but could that in any way also spell an interest rate rebound or an interest rate U-turn when it comes to the central bank positioning? Because, I mean, not globally, but at least in India, the central bank has always traditionally been an inflation warrior. Inflation kicking back also means that low interest rate regime will take a U-turn.
Of course, yeah. There will be a time when some central banks will want to change the interest rate environment. But you must remember, more and more, these central banks are losing control of money supply. With the cyber currency growth, not only Bitcoin, but all the other cyber currencies, the availability of currency is becoming greater and greater and beyond the control of central banks or governments. That's why, to me, it's very shocking that central banks are not now talking positively about cyber currencies. It's like you're handing them a shovel to dig their own grave, because if they're encouraging cyber currencies, they're encouraging the growth of money supply at an incredible pace. So you're going to see the devaluation of these currencies growing at a rapid pace. I know a lot of people say, well, Bitcoin's got a limit. There's a limit to how much can be produced. I don't believe that, frankly. No one has proven to me of what the equation is of this business. And of course, once we get into much more powerful computers, which we are moving towards very, very quickly, the ability to produce more coinage will be much, much easier and cheaper.
That's an interesting take. Mark, I mean, bull markets always move in a cycle. At what stage of the global bull cycle are we at? And are we anywhere close to euphoria or exuberance?
Yeah, I think we're getting there very quickly. If you see what's happening in America with these Reddit and the game company, you'll know that things are getting pretty hot. And it's an indication that we're in a very euphoric, or getting to a very euphoric stage of the game. But at the same time, it's interesting to note that there's that part of the market that's very euphoric, but there are other parts of the market that aren't there yet. In our stocks, we've had good appreciation, but we haven't had, crazy 100, 200% a week appreciation of prices. It's only in a few stocks that that's happened. So we're still, I think, away from the top of euphoria, let's put it that way. The good news is that when the euphoria ends and there's a big crash, that crash is very short in duration. If you look through history, from the top of the bull market to the bottom, at the bottom of the bear market, you'll see that it's no more than a year. But the bull markets then last for a long time. So I'm not afraid of any crash coming around the corner.
Okay, that sounds fairly optimistic. And, just wanted to understand, if we were to delve further, how you would advise investors to really play that. Then is it just enjoy the ride, because it seems to be like you're saying that this trajectory will continue, that the declines are likely to be short-lived?
Yeah, I think my advice to investors is that you keep your head in the clouds, but keep your feet on the ground. In other words, don't get carried away with things that you don't understand. For example, Bitcoin. I've talked to so many people, so-called experts. I still don't understand what it is. And I concluded it's a matter of faith. Now, when you have something like that, you've got to be very, very careful and be very certain in what you believe. So I tell people, don't worry about the euphoria. Just keep your head in the sand, and not in the sand, but in the books, and look at what the numbers are telling you, and be very, very conservative in the way you invest.
Being cautious at a time like this is definitely going to bode well in the long haul. And Mark, just wanted to also get in a sense as to what your outlook is when it comes to the real estate space as well. Looking at investing in that as diversification for the portfolio as well as real estate stocks.
Yeah, I mean, if you look at a country like India, it's no secret that there's an incredible demand for living space. And this demand is going to be increasing as productivity increases, as incomes go up. So there is definitely a big opportunity in the property market. And by the way, that's not only true of India, it's true all around the world. As incomes rise, people want better living conditions and they want to have a better home. Now, there'll be differences between the office market, the hotel market, the residential market. Obviously, because of COVID, offices are empty and people are working from home. Therefore, we've seen an upsurge of demand for residential space. But after COVID, people will return to offices, but in a different way. It'll be used quite differently. So these are the trends we have to be careful about and be aware of them. But I think that there will be definitely a market in retail and also residential space, but it just will be seen at different points in time as a result of changing demand tastes.
Mark, it's always a pleasure having you on board. Many thanks for joining us and giving us a sense as to what you made of the budget announcements as well as your outlook on the equity markets.
Thank you very much. Nice talking to you.